You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, a program where we break down the week that was and indeed still is on the other side of the fence, the futures options side of the fence. Maybe some metals, maybe some ags, maybe some crude, maybe some equities, maybe some crypto. We never know what the heck's going to slip onto our program. Maybe lean hogs. You never know. Fluid milk. You never know what's going to come across our radar. My name is Mark Longo from the old optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. You guys know how to get us every Thursday, 1:30 p.m. Central, 2:30 p.m. Eastern for the live stream or the podcast on your device of choice at your leisure. We don't judge how you like to consume it. Of course, however you listen, make sure you hit us up. We do like to hear from you guys. And joining me on the old program today, our old buddy Sean. I believe he's in London this week. You guys got quite the crazy travel schedule over there for FTSE, but they are owned by LSE now, so that is kind of the mothership, the home base over there in London. We'll get him back on, I believe, next week. So joining me on the old program this week, our old friend, Mr. Nick Howard, the founder of Bantix Technologies and creator of a little platform we like to use around here called Quick Strike. Mr. Nick, welcome back, sir. Have you been able to dodge this plague that just took me out this week, sir?
Well, I certainly hope so. Now, if I say that, I'm going to knock. I'm a little superstitious, so I'll knock on wood. Yeah. So far, although I can stand to cut a few pounds, but I'll take exercise and diet.
Yeah, that's not the way you want to do it, I don't think,
right,
sir. And make sure maybe while you're talking to me, just wear like a surgical mask and maybe wipe down your microphone with Lysol, just because this thing is so virulent it could get you over the airwaves here, sir.
That's why I stay out here in the burbs.
Yeah,
where you're in the city. Am I self-muting today, or are you muting me?
This
today?
is a good week this is a good week for you to be out in the burbs, sir. You don't want to come down here to the hot zone. If you can handle your own recognizance, I will let you fly, sir. Otherwise, I will. I will do the heavy lifting.
I will be extra quiet and will not slurp my coffee. I think we got it.
I'll let you, since you're kicking it out. Where do you want to start, sir? There's a lot of places we could start. I'll let you pick. What's drawing your eye of Sauron this week, sir?
Well, I think we're going to always end up hitting what we usually hit, but I think let's go to our precious metal. What do you think? Want to start there?
My precious. We started there last week. We were talking about skew. A good place to start off again this week and see how things are holding up here this week. Gold, of course, coming into showtime. About 1316 listeners, so off about 1.25% on the week. It's been kind of a mixed week for gold. Earlier in the week, of course, we saw the administration kind of abruptly pulling out of that conference there with North Korea. So gold always likes itself a little bit of international destabilization, so got a nice little pop off that, coming down a little bit today on the wake of some stronger than expected economic data here in the U.S. So it's been a week of back and forth for gold. Now we're net on the week off about 1.25%. Coming into showtime here, we're seeing vol again, kind of coming off a little bit here across the board, which has kind of been the story of gold's life from a vol perspective. Can it catch a break? Can it keep a nice vol lift? Usually the answer is no, but also when the vol comes in, but you do get some underlying movement to help offset that. So Nick has said before, and probably will say again, that gold likes to pay the rent, and as long as it keeps moving, it's not the worst thing to have some of that in the old back pocket. I'll let him break down the old shifting and sliding over there in a little bit, because that's his newest bell and whistle, and he likes it. Let's look here what's lighting it up out here this week in terms of all things gold options. Where the volume was, listeners, it's kind of a tale of a couple of different tapes here, because all the volume, about a little more than a third of the volume, so the largest percentage of the volume came in April with about 37, almost 38% of the paper. But the biggest trades were not in April. The biggest trade was actually in June. The 1,200 puts going up 10,000 times this week. So 1,200, nice even money, about 100 odd handles out of the money right now, going up 9,197 times on Wednesday and nearly 1,000 times today. A lot of that actually closing, about a third of that closing on Wednesday. So maybe some people deciding they didn't need their puts on the 1,200 strike, taking some of them off the table. Either way, that's the big print of the week, 1,200 puts in June, which is kind of surprising. And then we go out a little bit again to find our number 2 trade out here, which was actually, no, that is in That is in the April contract with the April 1340s. So a little bit nearer to home here, a little bit nearer upside. Just a tick under 6,000, 59.97 to be precise. Broken up 2,000 and change on Tuesday, about 2,400 yesterday, 1,000 today, and the rest left over there on Monday. Slightly opening, so kind of a little bit of back and forth on that 1340 strike. Remember, we have sold off a little bit this week, so we were threatening that strike earlier in the week. Now a little bit distant out of the money out there. Let's just see. Oh, here's the other print I was looking for. I knew I saw something else. I take that back. Number 2 is actually a little bit farther out, listeners. I had to scroll all the way down here on my screen to get all the way out to March of next year, March of 2020. And that's where we saw the 1,500 calls lighting it up this week. Actually, looks like a 1,300, 1,500, maybe 1x5s because the ratios line up. We see 1,000. We see 5,000 of the 1,500 going up on Tuesday, along with 1,000 of the 1,300. So a little 1x5 action maybe there. And then the next day on Wednesday, we see 2,500 of the 1,500s, accompanied by 500 of the 1,300. So looks like it did the whole thing 1,500 by 7,500 times on 2 different days. Mr. Nick, you're the keeper of the blocks over there. You concur with that that's all 1x5 paper? And what else is catching your eye out here in the precious stuff this week, sir?
I'll have to look. I wasn't looking at the blocks. I was trying to get, because I noticed, if you're looking at the report, or if you're going to look at the report, you're going to see that we saw the calls are not quite as firmly bid, and the puts are not quite as offered. But, that as much as that is telling us something, I think, and I'm going to say it again, I really like this shift and slide column that we have in there, because what I just tweeted out, you'll see, and it's also in the new dark mode charts. So if you're a Batman fan, I think you'll like the charts as well. We saw a little bit of a decrease in volatility, and like you said, we've been seeing that in the gold, but more, or if not the same amount, is coming with the slide down the vol curve. We see a bigger vol move, an actual vol movement, meaning a shifting of the curve all the way out in the September contract. We're in 1.5 from the end of last week, so that's pretty significant. When we're talking about having, it's weird. The term structure looks quite odd right now. We have July and August are above 9, but everything prior to July and then September, which I only have up right now, I'm going to put some more up, that's below 9% as well. So some low vol here, some really low vol. And we had a 16-point swing. We have, that September, I would say that looking at this, and I'm going to have to take a look at the term structure and see if that makes sense or if we have a problem, but it looks like SEP is a buy here from a volatility standpoint in comparison to everything else that's going on around it. But, we're seeing, according to Quick Skew, we see calls aren't, the 25 delta calls aren't quite as bid and the puts aren't quite as offered. But the reality there is we have a little bit softer of a vol curve, so not much a change in the shape. But we had a slide down $16, which is going to change us, 4 or 5 strikes. So we're really seeing just sort of the at the money dot sliding around the volatility curve with a little bit of a decrease in volatility. So I think that once people start to get used to this, and if they start using the subscription version of TWIFO, they're going to get a lot out of this. Going to really be able to see how things move and where the real action is, and whether volatility is actually getting hit or if we're just sort of moving around. So if we're sort of moving around and vol's not going in that much, even more so, an opportunity to own volatility at a low value. You're really not changing value because you're just moving along the curve, which means it's going to give you an opportunity, like we always talk about, to buy something cheap. And if the market moves, you can hedge it to start and then go up, sell futures, go down, buy futures back. So we've talked about this over the years quite a bit. When you have April volatility here, 25 days at 8 and change, 8 1/8 volatility, some pretty cheap vol here, Mark, in the gold.
Yeah, you definitely can't advocate for selling it. That's for sure. You can't say come out and crush this vol because there's no juice worth squeezing over there anymore. And you're right. If you're we've said this for a while now. The gold vol can't really maintain itself. It continues to erode, but there's enough movement out there that if you're deft out there and you're pretty savvy and maybe scalping a little bit aggressively, you can make this vol pay for it. So, and it doesn't cost that much. You don't need a big move. That's the upside of having low vol. You don't need a lot to pay the rent, as Nick likes to say. And gold, say what you will, it's been moving of late. So it's been an interesting one to watch. You're right with the skew. We came in last week talking about some aggressive upside skew, crazy gold skew going on up there. Not so much this week, so that coming in a little bit. Again, if you haven't upgraded to that super funky $300 pro version Nick's got floating around out there for the quick strike, which is a great one. You guys can see all this cool shift and slide stuff that Nick's talking for. It's broken out for you. You can see the chart. It makes it a lot more handy when you're looking at the skew and you can kind of see that evolution for yourself. So if you haven't done so, head on over to quickstrike.net and kick the tires for yourselves. We're going to keep on rolling here into the energy sector. By the way, I should mention, a lot of you guys keep hitting us up about palladium. It was record high prices again out there. Super strong volume. CME tweeting out that they're hitting tons of paper out there. Daily volumes in the futures over 14,000 contracts. So the futures are lighting it up. But as we said before, palladium is not really an options story yet. So not much for us to sink our teeth into there. Even though underlying wise, it's going to it's moving. The underlying is happening. There's volume there. Just not a lot on the options story. We said this before. We'll keep an eye on it. But for all of you writing in saying, hey, palladium, that's kind of the story right there. It's lighting it up. It's moving. It's rallying. The futures are doing well, but not a ton on the options. Let's keep on rolling. If you're playing along with the CME Group /TWIFO, or however you're getting yourself the old TWIFO report there, click on the old energy sector, head on over to WTI. You'll see what we got going on right now. Of course, our old friend, the Texas T. We're seeing kind of an interesting week here. We're kind of net unched coming into showtime on the week, right around the 57 handle or so. Off slightly, but not a ton here. We're kind of seeing, we saw a bit of a rally earlier on some Chinese data, and then we're kind of seeing today kind of a settling in a little bit. There's still some concerns, I think, out there lingering about the U.S.-Chinese deal. We also saw Trump coming out and telling the Saudis to, quote, take it easy on their production cuts, so he's not liking the crude inching up there a little bit. The Saudis, excuse me, not really taking to that. They're liking their cuts, and they're going to keep them up. We also saw a bit of a plunge, an unexpected drop there in U.S. crude stockpiles. That added a little bit of a fuel to the rally we saw yesterday. Today, again, like I said, not so much. Also seeing interesting data in terms of crude imports. Least amount of crude we've imported in a week in 23 years. That's showing that the OPEC's cuts actually having some teeth. Some of that obviously from Venezuela, where we have some issues with them right now. So no surprise, not getting a lot of crude out of Venezuela right now. But also the Saudis also trying to curtail our stockpiles here. And we're seeing that work. American stockpiles fell into about 8.65 million barrels out there. So a lot to unpack in this relatively unched number we're seeing coming into showtime here. In terms of the vol, kind of a bit of a mixed bag nearer term. I'm not looking aside from the contract that's going out tomorrow because that's kind of all gamma. You go a little bit farther out, at least a week. We're seeing vol, quote unquote, coming in a little bit kind of across the board here. So a little bit of an easing from a vol perspective. I'll let Nick run through his shifting and sliding here in a little bit. In terms of where the action was, about 45% of the action here in crude this week coming in the April contract, with number one with the bullet coming on these 60 calls. So again, not surprising, near term out of the money upside on an even level, kind of dominating the tape. 13,500 of those contracts taking the number one spot here. Let's see, that was 6,600 on Monday, about 3,500 on Wednesday, 2,250 or so today, and about 1,300 on Tuesday. Net about 3,000 or so opening. So some opening paper to the upside. Again, as we continue to perhaps threaten that strike, not surprising, we're seeing that one lighting it up. And number two is the 50 puts. So kind of a tight strangle / risk reversal / call it what you will. 50 puts with just about 13,000 on the tape as well this week. The lion's share coming on Monday, 8,000 of those. Excuse me. net about 2,000 opening on the week. So opening on the 50 puts and on the 60 calls here, as we're seeing a little bit of back and forth action in crude this week. Mr. Nick, what's lighting things up in shifting and sliding, and what was catching your eye out here in the Texas T this week, sir?
Yeah, we're hanging around still. I was looking at the futures chart just to kind of get a reminder of where we are at the beginning of the year. We were in the 40s at the beginning of the year, so it's sort of
seems like a distant memory now, doesn't it?
Yeah, straight move up. So that just tells you, I think, again, and I'm always, I don't want to say what's the word I'm looking for. I preface everything with, I don't trade the market, I watch the market. So just looking and thinking, there's some opportunity for some downside there if because there wasn't a lot of sideways trading in this move up to where we are right now. So again, it'll be something to watch to see if we get much higher. Again, I don't tout knowing anything about what's going to happen. Just watch the fundamentals and just watch the market. But as far as what I can tell you definitively is, the volatility that we're seeing, it's a real loss in volatility. So we have small change this week in the future, and then today even more so, no change to unch for the most part. So those changes in volatilities you're seeing on the report, those are real changes in vol. So vol is down. So this market, if it's again, we see it in a lot of markets, but if you go to a point and then kind of the expectation to continue going either down or up is not met, you're going to see some vol getting taken out of there as well, and that's what we're seeing this week. So these are pure moves down. We don't have much change in the shape of the curve. We don't have much slide along the curve. So this is when you're looking at those changes in at the money and you're comparing them to the shift and slide column, you're going to see that those are real changes in volatility. As far as the skew goes, obviously you would expect no change in the shape of the curve, a little bit of a depression in the volatility, but the shape is what's going to determine what quick skew looks like. As you will see, there's not much change in the richness and cheapness of the puts and calls respectively. So the puts are still bid, the calls are still offered. And the only real significant, if you want to call it, is you might see that July curve has a little bit of a push down in the 25 delta put portion of the vol curve. But again, I think the story here is you kind of elaborated on the news and the different things that be driving or holding the market up here. But I would say that, if we don't make again, just speculation on my part, if we don't make a move up towards that 60 mark, and we get any kind of news that says output is strong again, or rig counts or whatever people look at for the fundamentals and the macro side, we'll see a little bit of a push down, and then we see a bit in vol at that point. But until then, if we kind of just bounce around here, I don't think we're going to see too much.
Speaking of bouncing around, equity vol, since the last time we talked about it, has kind of been vacillating around this, around the 15 handle out in the old S&P vol, aka the VIX, right about 14 3/4 or so coming into showtime. The Russell VIX right about 17.10 or so a little bit north of 2 points on that spread, not quite 2.5, about 2.35 or so out there. So a little bit wider than it has been. It was about 1.5 points or so last week. So getting a little bit of width out there. And Mr. Nick, I don't know, I'll have to ask Sean when he's back. Sean doing his roadshow, wherever he's talking to out there, it's working out there because we're seeing some big prints going up here in the old FTSE Russell 2000 mini Russell 2000 options this week. OI up 80%. A big longer term prints out here. Russell coming into showtime right now. Long term out of the money puts, which is kind of interesting. Russell coming into showtime off not quite 1%, right about 1578 or so. And we're seeing the big prints not coming up in the near term months, not even farther out. No, it's all the way out. The bigger prints actually looks like maybe a bit of a funky spread out here in September of this year. Well, first off, these are the straight up puts. 8,115 of the set 1,300 puts going up. That's a big print, listeners, for the E-mini Russell 2000. So that's huge paper out there. And then also followed up number 2 by some 1,300 puts a little bit closer to home. It looks like these are, what are these, June? And these looks like maybe a 1x2 going up out there. The 1,300, 1,400 1x2 puts going up 930 of the 1,400 puts by 1,860, hence 1x2. Going up 1x2 there on Tuesday. Slightly closing a little bit on the 1,300, so maybe rolling a little bit. So interesting to see. Good to see some size paper going up out there. Whatever Sean's doing out there, Nick, his road shows, it seems to be resonating, huh?
Yeah, that longer dated stuff, that's quite a bit out there. Let me see if I can see what the delta is
big,
out there.
And it's way out of the money and way out. So we don't see that usually that size of big out of the money put print there.
Let's see what that's a 1,300 strike. You said, right? So yes. 1,300. So that's kind of out there. Let's take a look and see what this looks like from just standard deviation. Even let me see what kind of delta that has. So 1,300. We are talking about something that's trading less than $10 and doesn't even have a delta really. So it's probably the low end of the one delta strikes. It is likely about 6 standard deviations out from that to money. So that's an interesting print. And you said one traded in the month. Oh wait, I'm wrong. I was looking at the March contract. I apologize. Hold on, everybody. Let me go out to the one delta. I don't want to get anybody mad. All right, that makes more sense. So if I go out here and look at everything and go to the 1,300, we're talking about, this makes much more sense. We're talking about a 10 delta put. Yeah, and that's trading about, that's, you said 8,500? So 8,500, that's trading about, we're going to round it up to about $800 per. That's a $6 million bet, Mark, out there.
That's huge.
The current premium. It's pretty big.
That's big. I mean, we've been seeing prints in the hundreds for a while out there. Not many in the thousands, let alone 8,000 for the E-mini Russell 2000. So that's pretty sizable.
June? Let's see what this. And you said there was some June in there. So let's see what's the math look like from a size standpoint. The June did about 1/4 or 1/5.
Yeah, a little less than 1/4. About 1,800 versus 8,100. Yeah, so roughly 1/4.
Yeah, well, the June one's only trading.
Of course, the June it looks like there's another strike too. There's 1x2, the 1,300 and the 1,400 going up there as well. So that's a little bit 1x2. So if you add it all up, it's 3,000 contracts by about 8,000.
Yeah, so that's a pretty big. That's a lot of dough. That's a lot of dough to bet on the downside. But who knows? But like you said, Sean and his peeps have to be very happy when they see something like that. When you see an 80% growth in open interest overnight, I'm sure they're very excited about that.
Well, the guy's been doing road shows pretty much nonstop since they came on this show, talking, spreading the gospel of E-mini Russell 2000. Sounds like it's starting to take some root, sir, which is interesting. I'm glad to see there's some big paper out there. And when we talk, there's always size in the E-mini S&P, but good to see some going on. Let's look really quickly at the E-mini S&P while we're looking at equities too. Really quickly see what's lighting up the tape. E-mini S&P coming in about 27.87 into Showtime listeners. Again, off slightly on the week, but not a ton here. Looks like the 2,700 puts out there in March are the volume leaders, about 17,500 or so. So, yeah, it's puts, but it's not nowhere near as far out and as far down. Those are just not that far out of the money. So, yeah, interesting, kind of somewhat aberrant paper out there. We'll have to mark those in our to be watched category, Mr. Nick. I'll be curious when Sean's back from London. I'm going to ask him what he thinks of that. I'm sure he saw it because there's no way he missed it. And be interesting to see what he thinks about what's cooking. Speaking of what people think, it's time for you guys to unleash your thoughts, your comments, all sorts of good stuff. It's time for you guys to hit us up with a little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody. Welcome to your segment, the Futures Options Feedback segment. A lot of you guys chiming in on a lot of different stuff. We were talking before about gold paying the rent there, sir. Our longtime gold fan here in the audience here, Olive Trader, a.k.a. Options Game. He's chiming in. He said he had a long straddle in gold. It didn't work for him, Mr. Nick. So he's saying it didn't pay the rent for him. But, you know, we talked about this.
Different trade, though.
Yes,
different trade.
That's true.
It's a different trade. You find, you know, the straddle is expensive. If you're synthetic straddle, what you want to try to do is, I mean, it's from my standpoint, you're getting an out-of-the-money put or an out-of-the-money call, hedging it, and then playing that as your hedge. But if you're moving within a $5 or $10 range in gold in your straddle, that's not the same to me. And you really have to be on top of things quite a bit, you know. So that's why you never hear us talk about outright straddles. You hear us talk about hedged wings, which gives you a much easier opportunity to get your money back.
Yeah, that's why we say, you know, you also have to be diligent, obviously, with the scalping. That's kind of any sort of long premium type strategy requires some sort of defense to make it pay off. And in this case, you got to kind of be, that's what we said that from day one. You know, you got to kind of be a little aggressive with the scalps to make it pay off. If you get in the movement and you're not scalping, you're kind of missing it out. So yeah, it's a challenge on all things gold. I'm sorry to hear that. Hopefully your other trade. He's the guy, Nick, who's always watching out for the gold whales for us. And whenever they put up crazy stuff, he's always writing into us. So he's I love our network of spies out there. They write into us in a second when they see stuff. It's great. We got our little, what they say in Game of Thrones, they're birdies. Got their little birdies out there, keeping an eye on the markets for us out there. Speaking of keeping an eye on things, your old buddy, our longtime listener, Mr. Mark Bryant, he wants to know, he hopes cannabis futures will be coming soon, and then he can get options on the cannabis futures. I don't know if that's coming anytime soon. You know, there was the seed exchange. I went to their debut a few years ago, and that they've pivoted now since into crypto. They've gone from one. Of course they
did.
They've gone from one controversial seed to the other, Nick. So,
the hemp and the cannabis seem, because the hemp is actually a practical application, and the cannabis too. People will argue. I mean, it's coming from same vein, obviously, but there's a lot that can be done there. I think that's a market that somebody will be smart about making sure that they're on top of. Maybe Mr. Brandt, see if he can make it work. He said hotter than Bitcoin. It is for sure. I'd rather see that than anything crypto. I remember, you know, I know you got a big show on the crypto. I'm still my verdict is still out on it. It just seems like people got roasted pretty good, and until the futures are the way it's going to go. I don't think the outrights the cash market is going to be good for people. I think when it's futures and it's derivative based, CME's done a good job of it. I think they're burying the SIBO in terms of volume. That's going to be where it exists.
Yeah, they're burying the needle. They did almost 20,000 contracts last week or something like that. They had almost 19,000 in one day, which is, you know, you're pushing 90,000 coins there with the 5x multiplier. So they've hit some huge days out there. And we saw a big resurgence in crypto, and everyone was talking, you know, the death knell of Bitcoin. It was lurking in the low 3,000s, and it rallied up over to 4,000 again, gave some of that back now. But there is some fuel for the bulls out there, so it's been kind of fascinating to watch what's been going on. Hopefully you guys have been checking out the crypto rundown. Of course, we didn't get the chance to do one last week because of the holiday, but it's back this week, and it's up on the network now, so you can go check it out. Give us your own thoughts on all things crypto. You know, it's kind of taking some of the crypto away from TWIFO. We don't get a chance to talk as much crypto here.
However, may I interject?
You may interject, sir.
We will, and again, I'm gonna, as you notice, and I sort of apologize in advance to everybody, but I've been much more prominent in my display of things to come with Quick Strike and what's going to be available. Since we do have, I've been mentioning the quick apps that we have. One being TWIFO, another one being Spread Builder, which I will say our Spread Builder is one of the best out there. So you should take a look at it. Videos are available out there, but. We will also release a quick crypto app, and what we're going to do with that is we're going to focus our crypto on the Bitcoin futures on the stuff that the CME has. So we'll do the Bitcoin real-time index, and we'll do the Ethereum real-time index and the Bitcoin futures, and we'll have the same stuff. We'll have volatilities on that stuff, realized vol, as well as creation of implied volatilities and some pricing sheets and stuff like, so people can at least start to get their head around that kind of thing. That is coming very soon. So we will have a quick crypto app, very cheap for you to get it and get at that information. So, keep that in mind. We're going to make sure we're trying to meet the demand of people.
Whole separate crypto quick strike. Cool. Look at you guys diving into the crazy contentious side of the space. And it is. We've just been playing in that space for the last few months. It is certainly the Wild West out there, which does kind of make it fun a little bit. Let's see here. We've got Nashly. Nashly wants to know, is there the same bias towards puts in most futures options that we see in equity options? Well, no. I mean, look at how much time we spend talking about skew here on this show. If it was all the same, we wouldn't have to do that much, right? If it was all what you're talking about, of course, is investment skew. That's the bias towards the puts we see in indexes and most equity options. And yeah, every complex. That's what makes futures options kind of fun. It makes doing this show fun. Is every product has kind of its own skew pattern, and that could change week to week. Look at gold. Gold's all over the place. The calls are bid, the puts are bid, it's equal. It's kind of a crazy town. So that makes it kind of fun. So yeah, the short answer to your question is no. I mean, in the equities we see that, but beyond that, it changes on a product by product basis. If there's fear to the upside, it's going to be a big bias to the upside. If there's fear to the downside, it's going to be to the downside. If there's something else going on, if there's equidistant, it's going to be a smile. So that's, I don't know about you, Nick, but that's kind of what entices me about doing this show, is that it's a different story with every product every week, right?
Yeah, I think that's the fun part, is that, and what we've also tried to do for you and with the report is give you a snapshot of what that looks like fairly easily, so you can sort of take a bird's eye view of the entire set of benchmark products that the CME has and see what it looks like and quickly get access to that information. In fact, I'll tweet out a report that's not public to anybody right now. I'll tweet it out right now. It's called our Quick Skew Benchmarks Report, and that'll give Nashly or N-Ashley or Nash L-Y or Nashel Y. We got to do our pronunciations of everything. That'll give you a good idea of what all the skews look like across all of the asset classes and all the major products that trade on the CME. So, so to Mark's point, it's not all the same. That is part of the fun. And the best part, part of the reason we don't cover the equity so much, outside of we want to talk about it for the Russell and that type of thing, but part of the reason we don't spend much time out there is because there's not a lot of change in that, right? Or not a lot of gross changes in it. You might see some slight shifts, but the other markets like gold, like we talked about, like you said, with crude, you could get flip-flops with the 10-year. So it's much more fun and skew changes means there's volatility. That means there's shift in the curve, and that means there's opportunity. So that's what makes it more fun. Mark, I just tweeted that quick skew report. If you want to retweet it, I just added you on it as well.
We shall retweet it over here. Since we're talking skew, let's get to this question from Tag Analysis. This leads right into one of your new features you just rolled out here, Nick, so this is perfect for you. Tag Analysis wants to know, what's the difference between a slide and a shift when it comes to skew? Aren't they the same thing? Mr. Nick, disabuse him of that notion, sir.
Okay, so what I'll do here as well. So it's funny because somebody emailed support and asked the same question today, and I gave them an answer.
Was it Mr. Tag Analysis? Is he hitting you up twice?
It wasn't. I don't think. Again, I don't see the handles from Twitter. I just see the email addresses and stuff like that. So basically, think of it this way, okay? Let's start with the equities. So you have the investment skew that Mark talked about. So you have basically a slash from the top left to the bottom right. So if say the market just is moving around within we'll call it a 10 or 20 handle range. So if you're on that curve and the market goes down and you stay on that curve, and that means the money dot is going to move to the left, which means inherently the volatility is going to go up from a curve standpoint. Now, that's a slide, right? It's along the curve, but there's no change in the actual level of the volatility curve. So that's a slide. And same thing if the market goes up 10, 20 handles and there's no and you just kind of go from one strike to the other, that's a slide to the upside. So you're going to see at the money volatility actually appear as if it has changed, and it has, but the level or the plane where the vol curve exists hasn't changed its its distance from the x-axis, right? So how high it is from the x-axis, and that's going to be where the shift comes in. So, but when you can go look at like crude, you can see that crude has an entire shift, meaning the vol curve just shifted down and the strike didn't change that much. So a shift is when the vol curve shifts up or down, and a slide is when it moves along the vol curve. So how do we determine that? The shift is just a general, what's my change in the current strikes in the current strikes volatility value, and the slide is how much has last week's at the money strike changed from now until then. So you want to see how much we've moved, and then how much we've moved along the curve, and how much we've shifted up and down. And I promise you, if you get the report that has the click that shows you the picture, you'll see it immediately, and it will really give you some different insight into what the volatility is doing. So as a for instance, the Russell March contract had a at the money volatility change of 0.75 of a vol percent. The shift on that is 0.19 or 0.2, and the slide is 0.5, 0.55, whatever. So it slid down because the futures it slid down the futures line, but up the vol curve because of the investment skew, and had a little bit of a bid to it. So that's how you got to shift and slide, how much it slides along the vol curve, how much shifts away from, back and forth between, the distance from the x-axis. Long explanation, but I think that'll be helpful for you.
How did I know you'd have an explanation up your sleeve for that? But yeah, the slide is just moving along the line, right? And the shift is the change going on across that. Good stuff. Let's wrap it up, Mr. Nick, on a positive note. We had our friend Olive Trader writing in before saying it didn't work for him, but he did follow up and said, we had good points about the scalping, which thank you, but he also said he wanted to let us know his loss was really small, and he has had a few good trades doing that this year. So there you go. It has worked out for him in the past. This one, apparently, for whatever reason, not so much. So there we go. A little positivity, Mr. Nick, to close out our TWIFO on this week. How does that sound?
It's good. He becomes the olive branch trader, then, is what he is, because he's offering us,
Yes, that's exactly what he is. All right, listeners, that's going to bring to an end. Trying to bring you a little bit of a tighter TWIFO show these days, getting it in around 45 minutes or so, get you in, get you some info, answer some questions, get you on about your day so you guys can keep on rolling. But keep those questions coming. We love to hear from you guys. Make sure you join us every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern, so you can weigh in about your gold trades, about your love for cannabis futures, whatever else you got on the brain. You got a lot of stuff on the brain, or hit us up on social media. You guys know where to find us by now. Keep those questions coming. We can do another all-question show one of these days. We got so many. Keep them coming. We do love to hear from you guys. And Mr. Nick, before we go, sir, you mentioned a bit before, you said it was kind of like, it sounds kind of ominous, but it also sounds kind of cool. You got this new dark mode. What are you guys doing with that, sir?
Well, when you go in, even in the free version, Quick Strike Essentials, you can go into your profile and all the charts will basically go inverted to black. So we've had a lot of requests for the more traditional trading platform colors. So we're going to try to do a general big black mode as well. But right now we started out with the charts. So dark mode is pretty cool, and the colors pop, and it's nice. And for some people, it's just, if they're using them as part of publication, like our friends over at Macro Hedged are, they use our stuff and they put out trade recs and have our charts embedded. So that was one of the reasons that we moved towards getting that done quickly. And then, like I've been mentioning for 3 weeks, available this weekend, we're releasing 2 what we're calling quick apps. They are $25 a month subscriptions, paid in full annually, $300. You can do TWIFO, which is going to give you the report that you see over on the CME Group site, the free one, but it's all the links are going to be active, meaning you can dive in and you can see the curve and the shift and slide. You can see the volume for the week. You can see the pattern in open interest. You can see the historical volatility curves, all that kind of stuff, and something that's really in there that's embedded, which is worth it in and of itself. If you click on the DTE column, we have the DTE report, and that's going to give you what volatilities look like with that many days to expiration for all the history that we currently possess for those products. So in some cases, you're going to get 12 years worth of seasonal data. So take a look. I think that for the people who have been on the edge of wanting to subscribe to our stuff, this may be a great way to follow along in the show, help support the show, help support your knowledge with getting access to some really detailed information. And finally, the second of maybe 4 or 5 that we're going to release is Spread Builder. And if you've seen our Spread Builder, the free one out there is a very, very, very light version. This new one, or not the new one, the one that's in the professional edition, is rock solid. But we are releasing it, same thing, $300 a year. You can save your spreads. You can do your analysis. You can lock them, do P&L analysis. It's a fantastic tool, if I do say so myself. So take a look. There's some good value there. And then there's 2 or 3 other ones coming that I think you're really going to like as well.
Is Bantix.com the place to go for all of that, sir? Is there a special URL they need to go for that?
No, Bantix.com is the place to go. We also released 4 new videos. We have a quick doc so you can learn a little bit more. And there's also some new facts up there, pricing facts, and also facts about the platform and about these subscriptions that are due to be released. So take a look, and you could always meet us on Twitter. Follow us at QuickStrike1, QUIKSTRIKE1, or email us at support@bantix.com. So glad to hear from you. Just let me know.
There you go. The man's got his plugs down. Bantix, that's BANTIX.com is the place to go for all that. He just laid out a bunch of cool stuff. So check it out, different price levels. So if you wanted to jump on board but you weren't sure about it, they got the price level for you. Bantix.com, the place to go. You got it all there. Quick vol, quick strike, all that cool stuff. Check it out. Let him know you heard him on Twifo. It'll make him excited. And of course, speaking of excited, I'm sure our buddy Sean, our friends at Footsie, excited, pretty active week. I'm looking forward to getting him back in the studio next week, maybe with some delicious burgers. Wouldn't be good for this week anyway. I wasn't up to many delicious burgers this week. Excuse me. But we'll get him back to talk about all that good stuff. In the meantime, though, check him out. Footsie Russell, FTSERussell.com is the place to go for all that data. And give him a follow on Twitter as well, at Footsie Russell, for all that stuff they tweet out in between about things like the rebalancing and all the buy ride stuff you guys like. They have all that data there as well. FootSieRussell.com. And of course, our friends over there at CME, we'll be catching up with them pretty soon. Probably Sean as well in person, coming up in a couple of weeks down at the big FIA Boca conference. We'll be doing a lot of good stuff from down there. Live to tape. I'm not sure if we'll be able to put them out live. We'll see how the connectivity works down there. But definitely live to tape shows, interviews, fun stuff coming from that conference. I should at the very least be able to catch up with them in person. Eric Norland and Blue Putnam, they have a book that they put out together. So I'll catch up with them about it down there, and they could talk about what The Economist's book is all about and all sorts of other fun stuff. Meanwhile, you can always find their research. CMEgroup.com is the place to go for all of that. And on behalf of Mr. Nick, and on behalf of Sean and his crew, and of course our friends over there at CME Group, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for joining us live, asking your questions. Keep it all coming. We love you all. And we'll see you back here tomorrow for a new era, beginning of a new era of Volatility Views. I'm very excited about that. So stay tuned for that, and we'll see you tomorrow for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.